Hi guys, I'm Kalilah Reynolds and it's time for another episode of What's in It for Me, brought to you in partnership with the Ministry of Finance. And so this is our end of year edition, and I had to bring you a very big guest, none other than the Minister of Finance himself, Dr. Nigel Clarke. Hi, Dr. Clarke.
Hi, Kalilah.
Yeah, how's it been going so far?
So far, so good.
Meaning everything.
We're ending the year with some very positive news, and I think that our accomplishments this year put Jamaica in an even stronger position to begin 2020 with.
So the most recent being the Moody's upgrade, and you also had the Standard & Poor's upgrade recently.
Yes.
On this program, we like to ask people, what's in it for me? Why should the average person care?
Well, let's just break it down first of all. Last week, Moody's, one of the international credit rating agencies, upgraded Jamaica's credit to the highest level that they have assigned to Jamaica in over 10 years. And a few weeks before that, Standard & Poor's, another international credit rating agency, upgraded Jamaica's credit to the highest level that they have ever assigned to Jamaica, and they started rating Jamaica's credit 20 years ago. Mm-hmm. Now, what does that mean is what that's the question you asked.
Yeah.
Well, Jamaica has debt outstanding, it has bonds outstanding, and a credit rating tells prospective investors how risky that bond is for you as an investor. When our bonds are upgraded, it means that the rating agency is saying to investors these bonds are less risky today than they were yesterday. Now, why is a rating agency saying that Jamaica is less risky? Why is that important for us? It's important in a number of ways. The first way is that the interest costs of the country, those interest costs go down, because the higher rated your bond, the lower the interest that you pay.
So what type of interest rates are we able to attract now?
Well, it means, first of all, that the government can borrow at lower rates. And if the government can borrow at lower rates, it automatically translates to the households and to businesses. The second second sort of way in which it translates to citizens in the country is that a higher credit rating just means that the assessment of the economy is that it is less risky. Mm-hmm. And, though risk is not something that we walk around seeing every day and have some qualitative or quantitative number assigned to it, you don't want to live in an economy where the risk is high, because it means anything that you enjoy at a moment in time could just go away if the risk materializes. You want to live in an economy where risk is subdued, right? And
naturally.
Right. And so these assessments by persons who assess countries around the world that Jamaica is less risky than it was yesterday gives us a greater sense of security. And then the third reason why it's important is that there are a lot of investment dollars in the world. There are billions, hundreds of billions, trillions of investment dollars. You think about the largest pension funds, the largest mutual funds, the largest insurance companies in the world. And many of them cannot invest in assets that are below a certain grade because they're just seen as too risky. As Jamaica comes up the curve as far as credit rating curve and our riskiness subsides, there are more and more investable dollars that become available to Jamaica. And now we want to get to the stage, which will take us a few years more, where we can be upgraded again and again and widen the pool of resources that can see Jamaica as a viable investment destination. And when that happens, it's a brand new day, because projects become easier to finance. There will be a lot more investment because it's seen as a safe place to invest.
We're now in the B range. Do you see us getting to the A range?
Yeah, absolutely. That has to be our goal and our ambition to eventually become investment rated. Mm-hmm. As far as the riskiness with respect to the fiscal accounts are concerned, we need to stay the course and get to 60% debt to GDP. That's definitely in the investment grade category. But investment grade, though, needs more than simply the fiscal variables.
Right.
Investment grade is going to require that we strengthen the governance framework of our country.
That would be a tremendous
Oh, it
accomplishment.
would be a tremendous accomplishment. And it must be
We've
our
never
ambition.
been investment
We've never
grade,
been
have we?
investment grade in our entire history, never.
In the Caribbean,
You know, funny enough, Barbados
Cayman.
was once investment in terms of CARICOM. Yes, certainly
Yeah.
Cayman and those other Cayman would definitely be up there, and Bahamas. But Barbados was once investment grade 10 years ago, and it lost it, which is it's so humbling that these credit ratings that are positive and strong, that you
Things can change.
don't keep them if you don't implement policies that are
Right.
consistent with those
Right.
rates.
If you don't do the work.
But going back to it, it must be our ambition at some point in the near future to become investment grade. And I believe that's within our capacity. I believe that that is one of the benefits, or would be one of the benefits of achieving our fiscal target of getting debt to GDP to 60%, because it reduces the risk in the economy. And by reducing the risk, you entrench stability. And why stability is important? It's important because when you have stability, it gives the flexibility and the policy space to respond to shocks. Remember, we are in a market economy in the world that things go up and things go down and there are shocks. It's like you're in a boat in the sea and the waves go up and down. But you want to be in a position that no matter how the waves are likely to move, right? No matter how things go up and down, you have the flexibility to be able to respond. Yeah? We didn't have that flexibility in 2009 when we entered the Great Recession. We entered the Great Recession with debt at 120% of GDP, 124% of GDP, which gives us no flexibility whatsoever. So instead of having the room and the space to reduce taxes in going into a recession, we had to increase them. We never want to put ourselves in that position. And that's why those debt objectives are important. When we get to 60% debt to GDP, it gives us a lot of room to respond to shocks and respond to crises.
And the target is for us to reach there when?
By 2025, which is just around the corner. Next year is 2020, so we're talking about 5 years. But now to get to investment grade, we'll have to do more than just the debt target, right? Investment grade, we're going to definitely have to elevate our level of economic growth. We're going to have to strengthen our institutions and strengthen our governance and improve some of our social outcomes, right? Investment grade is it assesses the stability of the society, not just the economy. But that has to be our ambition. We cannot imagine, given our history, we can't imagine how positively different Jamaica will be when we are at that designation of investment grade. As I said before, because the fundamental assessment means that the riskiness of your economy is subdued, you have deep economic resilience and your economic prospects are very favorable and enhanced. And as a result of that, savers around the world, investors around the world, pension funds who are saving for retirement, many of them are prohibited from investing in countries that are below a certain investment grade. And when you're investment grade, for sure, the entire investable world is open to you.
And it's encouraging that we've gotten this upgrade right on the heels of completing the IMF program. So
It
so
is.
soon after that. But you mentioned something too that's equally important. We've been focusing a lot on debt reduction, which is very important. But you said it will take also additional growth to get there, and that's the one thing that's just just not getting there.
One thing that has definitely been planned behind target. That is one thing for sure, and it is something that I spend a lot of time thinking about and focused on. I am absolutely confident, though, that we are going to get there, right? And we're going to use every tool at our disposal in order to incentivize or to catalyze economic activity and economic growth. And you're definitely seeing the results of the monetary policy tools in that as interest rates have been reduced, persons are taking on more risk or making more investments. There's more activity in the economy. We have to just make sure that we drive, towards value-added activities and so forth. And we're going to have to accelerate the reforms that can improve productivity of capital, productivity of labor, and that can reform our public bureaucracy and ultimately attract new investment to the country.
As the signs are pointing us there,
Yes.
the low inflation, we have good jobs numbers, well, the best they've been in history.
In history,
In history, that's coming down, but what's just keeping us from attaining that growth?
The good news, and I'm going to avoid your question, but the good news is that we have the product of growth that we want, right? Why do people want economic growth? They want economic growth so that we can have jobs growth and increase in standard of living. Well, we are having the job growth, and that is what is puzzling about this period, is that the job growth is definitely there, it's evident, and all of the numbers suggest that that is indeed the case. But the economic growth has been lagging. But let me put things in context so your viewers can understand. In 2018-19, we had growth of 2%, which is the highest growth rate we've had in 12 years. And it was higher than the median growth rate in Latin America and the Caribbean. Our growth rate for 2019-20 has been forecasted, we won't know until the end of the financial year, but has been forecasted at 0.7%. And as low as that is, it is higher than the median growth rate or the average growth rate for Latin America and the Caribbean. The same headwinds that are affecting Latin America and the Caribbean are affecting Jamaica. And what we're seeing is that the trade tension between the United States and China has resulted in a reduction in commodity prices. And a lot of Latin American and Caribbean economies are commodity dependent, or commodities play a significant role. We have seen that play out in Jamaica with the closure of the Alpart plant, Gisco plant, which is related directly to those tensions and the fact that prices have been reduced below a level that Gisco finds profitable to produce here. That is happening all across Latin America. Prices of copper, prices of iron ore and other commodities. And as a result, Latin American and Caribbean growth is the average for this year is less than 0.7%. So it's 0.3 or 0.4. So Jamaica is ahead of the average. It is little comfort, but it is useful to understand the context, because you can't easily point to another period in recent times where we've been above the average of Latin America and the Caribbean. It's just that we have that we have reformed our economy at a time when global growth is subdued. That's just a reality we can't get away from. But we're not going to stop that, but it's a fact that needs to be understood. It's placing everything in context. And we're going to do everything that we can to accelerate growth. We got the Gisco plant closing obviously is a shock, not something you could predict, and that accounted for a significant part of growth. Without that, we would be close to 2% this year. But also, it's not so good to be dependent on one sector.
Because on the positive side, tourism hasn't been badly affected at all. It's doing great.
Tourism is doing great. Tourism is the one sector that has grown every year for 25 years. In fact, I believe
and that depends on the American economy and the global economy, because that's where the tourists are coming from.
Yes, but even so, think about the American economy has gone through ups and downs. Jamaica, the tourism sector in Jamaica has grown every year, regardless of what's happening in the United States. That's a statistic that's very powerful. It's just that we haven't had the complementary, and we haven't had that tourism growth jumpstart in the rest of the economy in the way we would like, So working on those backward linkages is something we have to continue to do. Right.
Let's talk about taxes. The tax season is coming up. Well, I guess here at the ministry it already is tax season, but everybody else right now is Christmas and you celebrate and whatnot. For you guys, it's work. It's a lot of work. How advanced are we with the new budget?
Well, the budget cycle begins in September. And, this is a period of ensuring that our priorities are going to be reflected in the numbers that eventually come out. So this is a very busy period for the Ministry of Finance and the public service.
I'm sure you would have heard the calls from the opposition to slash GCT by 2 percentage points in the new budget. Is that something that is even feasible at this time?
I've heard it, but I'm not going to get involved in that discussion. At this point in time, it's we have our work to do here, and that work encompasses ensuring that expenditure and for all of our ministries reflects the priorities of the government, and that's a very tedious exercise, and that's what's going through that and ensuring that we make the right kind of allocations. It's where our focus is at this time.
But we've been exceeding collection targets for some time now. We've been exceeding the primary surplus target. Surely there's room for another give back. Last year you did a tax give back.
As I said, right now we're focused on putting the contours of the budget together, and that's what we're focused on.
The diplomatic answer doesn't want to take away from the budget presentation. That's going to be in February? Well, the tabling
The budget
will
is
be in
tabled
February.
in February, but the budget presentation is in March.
Okay.
Yeah.
All right. So I guess we just have to stay tuned for that. Everybody's been asking me, Minister, about Jamaica IPO. It keeps asking me, when is it coming? I'm like, I don't know. I'm not the government. I'm not the broker.
That's good to know. The Jamaica, we're in the final stages of that, and I expect for that the IPO will be launched early in the new year. So look out for it. And it's a chance for Jamaicans to own a piece of a major infrastructure asset in the country. And, consult your investment advisor, but, I would say it's an opportunity not to be missed.
Have you completed the buyback of the highway yet?
I think all the documentation has been signed, and the funding of that is going to occur, I believe, early next week. So by the end of the year, that part of the transaction will be done. And so it's just as I disclosed when we launched it first, as soon as that is done, we're going to go with the IPO. So you can look out for it, as I said, very early in the new year.
There's a lot of excitement about that IPO, Jamaica, probably even more than Wigton, from what I've been observing. Why is that important? Why is this such a big deal?
Well, you should tell me why there's excitement. But from my perspective, one, Jamaicans have been excluded from major infrastructure investment in this country for the better part of 25 years, right? When you think about telecoms, you think about energy, you think about roads and highways, all of those have gone to foreigners. This is going to be one of the first, I don't want to say the first, but one of the first real opportunities for Jamaicans to own a major infrastructure asset. We're talking here about the east-west corridor of Highway 2000. I think the second reason, it's an asset class that has unique characteristics, and that's an asset that's not in people's portfolio today, that has these kinds of characteristics. And I believe the third is that they see that this is really the beginning in terms of infrastructure development in Jamaica. There's so many more highways to be built, and the Prime Minister has announced roads to bypass towns across Jamaica and so forth. And so the potential future of Trans-Jamaica Highway is bright. They would start with the east-west corridor, but they could, over time, as a private company, could do a lot more. So I would agree that it's an exciting opportunity, an exciting play. And investors should take a very good look at it when it comes out.
And next year you also have JPS.
And we have JPS is in train now. That's going through the final stages of preparation. The lawyers have been identified. The investment bank has been identified, and that you can expect certainly in the first half of next year. I would say in early next year you can expect that as well, and that will be a very significant opportunity. Again, the Jamaica Public Service Company has been here for a long time. It has been in private hands for the better part since 2001. and Jamaicans have not directly participated. Now, the government is going to take its 19% stake and put it on the market and give Jamaicans an opportunity to own a major, significant energy asset. You know, that's a different day. So we believe what
It's
we
an
want to
incentive
do.
to pay a light bill too.
Yes, we want to.
You know, you get it back in dividends.
That's exactly right. We want to broaden the ownership base of the Jamaican economy. Right? We want more and more people to own a piece of Jamaica. We want you to own a house. The most houses that NHT has constructed in a 4-year period, in a very, very, very long time, have been under this 4-year period. We want to own your house. We want you to own other assets, equity assets, assets in the real economy of Jamaica, because we believe that the broader the base of ownership is, the better the society will be. We'll share in the growth and development of our country.
Thanks, Minister.
My pleasure.
Okay.
My pleasure.
That's What's in It for Me, brought to you by the Ministry of Finance. I'm Kalilah Reynolds. All the best for 2020.